Hi all, my name is Anirban Ash and I am currently pursuing my postgraduate diploma in management from IIM Tiruchirappalli. This video is prepared as part of our Indian economy and policy course. In this video, I will be discussing about the term NPAs, that is non-performing assets, and its impact on the Indian economy. So, let's first understand what is NPA. NPA loans in which payment of interest or installments remain unpaid for more than 90 days. The investment option like debentures, bonds and others are also the same. While 90 days of non-payment is the standard period of time for debt to be categorized as NPA, the amount of elapsed time may be shorter or longer depending on the terms and conditions set forth in each loan. Now that we have understood what is NPA, let's understand what happens to a bank's financial statement when an account becomes NPA. Once an account is classified as NPA, the bank or the lender is required to make a provision for the same in its balance sheet. The percentage of provision required to be made differs from account to account based on two criteria. The number one, the asset coverage, and number two, the age of the NPA. That is, the period for which the account remained as NPA. However, if any account remains as NPA for a longer period of time, the bank or the lender is required to make provision for the entire outstanding amount. NPA are also shown in the profit and loss account of a bank. Thus, as NPAs rises, the profits of the bank decreases. Now, let's try to understand how does an increasing number of NPAs affect the Indian economy as a whole. To understand this, we first need to understand how a bank makes money. Bank makes money on the difference of interest earned on loans and interest paid on deposits. Now, when an account becomes NPA, the interest income from that account will be gone. Also, bank uses the interest earned to increase the lending power and lend that interest money to other customers. So when an account becomes NPA, not only does the bank's interest income decreases, but also the bank's lending power goes down. Businesses require capital to grow and they depend on banks for money. If banks suffer losses, then they would not be able to lend and thus this would slow down growth in the economy. Moreover, India has already adopted the Basel III norms on banking, which stipulate stricter capital adequacy norms. So, any bank which is required to make huge provisions due to NPAs will face difficulty in maintaining the capital adequacy norms. This prevents them from further lending to investors. To compensate for the losses occurred through NPAs, bank will charge higher interest on the regular accounts to make good of that loss. Further, banks have to pay lesser interest to the depositors. This will lead to increase in the cost of funds to the borrowers of various sectors and also reduce domestic deposit rates. Like any other economy, the domestic savings form a large part of investment needed. The lower rate of interest on deposit in a high inflationary economy like India will adversely affect the domestic savings and thereby the domestic investment. In an environment of thin margins and massive global competition, the domestic business houses cannot pay higher rates of interest for their borrowings and survive when their global competitors are getting funds at a very cheap interest rate. It will be difficult for domestic players to fight any serious price wars internationally with these circumstances. Most of the global players are immensely helped by the lower cost of borrowings and are providing cheaper options even in the Indian market. This will lead to higher negative balance of trade and also to the destruction of domestic industry, resulting in large unemployment and social unrest. So, though NPAs are problematic for banks, but it has a snowballing effect on the whole economy. Hope you have liked my video. Do let me know about your views in the comment section. Thank you.